Hello, everyone. Let's get ready for another enlightening journey as we set our sights on the financial assets on our watch list, which are the GBP USD, XAU USD, US Tech 100, and of course, the US All Spot. Now, before we kickstart the session, let's quickly confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly without distortion, please type in hi in the comment section, as this will give me a confirmation that we are good to go this morning. So I would like to see hi HI in the comment section, and let's get this party started. So I'd like to see some feedback, please. I will be checking the comment section. I'm trying to load up my comment box. Give me a moment, please. Okay, let's see what we have here. All right, so 573, I see your comment. 498, good morning. 564, Gelly, good morning to you. Thank you very much. 7341, hello, Norway 76. How are you doing today? It's afternoon over there, I see. All right. Bombino, thank you. Hey, Carrie, good morning to you. Thank you very much. Norway 76. Okay, thank you for that feedback. I really do appreciate that. 2788, thank you. BKDMC, thank you very, very much. So I think with this handful of feedbacks, I want to see that we are ready to go this morning. And it's on this note I welcome you all to yet another promising session on the Extra Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be delving into the historical price movement of the instruments on our watch list. And of course, in preparation for today's trading session, I have conducted a comprehensive price action based technical analysis, employing simple yet powerful setups to navigate the current market structure. I have made intriguing discoveries that I'm eager to share with you shortly. Our analysis, of course, will revolve around the utilization of trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of all the financial assets on our watch list. And for those who are joining us for the first time, you are highly welcome. I'm always glad to have newcomers in the house. And what we simply do here is to come together as a community, gathering in anticipation of the New York trading session. And during this time, we normally review and manage our current positions, while we also aim to position ourselves strategically for the day's trading session. So this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And in fact, to be able to use this material in full strength, I would advise you to stay tuned into the end of the session and try to be part of our subsequent session, as the more time you spend with us, the better you become in utilizing the information you have gathered here to make your independent decisions on your own account. So once again, you are highly welcome on board. So as usual, we are going to be diving right into the business for today, and you know how we do it. The first thing we want to be doing here is to check on the economic calendar. Keeping tabs with the fundamental factors is an important routine we normally do in this community, and if you have been following us for some time now, you will understand how important this fundamental factors is, as it manifests on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns. So with that being said, here let's dive into the economic calendar. And for today, July 25th, in fact, I was unable to see there was no high impact event to look out for today. So what I did instead was to um, include the medium impact event into my filter, and I was able to come up with a couple of events from the US economic docket. And the first one here is the housing price index, which is always released by the Federal Housing Finance Agency. And in fact, it provides an estimated value of housing market condition. And it's an important indicator as the housing market is considered as a sensitive factor to the US economy. Generally speaking, a high reading is seen as positive for the US dollar, while a low reading is considered to be negative. Now, looking at the data that came in the month of May, we have 0.7%, and economists are projecting a 0.2%. So I think there is a contraction in the housing sector, which everyone is thinking that there will be some reduction in that index there. So we are going to be looking forward to what the actual data is going to be like. And then we also have the consumer confidence, which is released by the conference board, of course, and it captures the level of confidence that individuals have in the economic activity. A high level of consumer confidence stimulates economic expansion, while a low level drives to economic downturn. So we want to look out for what the actual data is going to be like, as at this point in time we really do not have data to reflect on. So we are going to be holding on probably in an hour before the event. Data will start rolling in. So we are going to be looking forward to how this market participant will be anticipating this event, which of course would reflect on the chart as price action. And in fact, the last 24 hours has been quite interesting, as you will have noticed that besides the US all spot, all other instruments have been caught within a choppy situation, a consolidation phase at some point, hereby insinuating the level of indecision in the market at this point in time. And of course, we all know why that is happening. We know that we are anticipating the Fed interest rate decision, which is coming up tomorrow, and this is a very high impactful event that everyone in the market is looking forward to. And as a result of this, majority have been risk averse in the market, which has reflected in consolidation phases across the financial instrument on our watch list. So we are going to be taking this into consideration while we review the current market structure. So with that being said here, let's dive right into the business for today. And the first instrument on our watch list for today is going to be the US All Spot. And in fact, in the last 24 hours, it has been quite a profitable journey for us on the US All Spot. And let's run through how the week started for us in this community. So at the beginning of the week, we saw this bearish gap, giving us an insight into the institutional sentiment during the course of the weekend. However, something interesting happened during the first 12 hours of the week, as we saw price action was confined within the $77 area and of course the $76.50 level, to give us an insight into the level of indecision in this particular market. And if you recall vividly what I said here yesterday, I told us all that I already had a buy positions at the breakout of the $77 area and of course the $77.20 level. And I made mention here that for those who had missed out on this opportunity, that you could position yourself at a retest of structure to capture that move to the upside. And that was exactly what happened here, as we saw price action move over how many pips was that? About 190 pips in our favor before this whole chopper situation began. So for those who took advantage of this opportunity, well done to you for being on standby, as you will currently have a minimum of how many pips now? About 147 pips in your kitty at this point in time. Now, you know how we do it when price action moves significantly well in our favor. The next thing we want to be doing right now is to move our stop losses to secure this current buy position. And for me, I'm of the opinion that we want to be moving our stop losses to anywhere around the $78.20 area and the $77.80 level. And the reason why we are having something a wide zone is simply because we want to give enough room for price action to breed. Probably there could be some retracement phase before the next bullish momentum happens. So with a well secured position at this point in time, what is going to be our next line of action for today's trading session? Now, looking at the current structure we have here, it's quite obvious that the week has started on a very strong bullish note, as we have witnessed this strong impulsive move into that $79 level. And in fact, as soon as price got into that zone, we begin to see sell pressure resume around that area. And in fact, this sell pressure has led into a situation where price has been caught within a range for the last 14 hours. And with the situation here, it is quite clear that the market is very, very indecisive at this point in time. And you all know how we do it in this community. When price action falls into this kind of range, we want to wait patiently for a signal to happen where a breakout of the resistance line will give us an opportunity to buy, and the breakdown of the support line will give us an opportunity to sell. Now, if we consider the impulsive move that led us to this point, it is very possible, it is very likely that this consolidation phase here could transition into a trend continuation pattern. We're having something like a flag pattern, bullish rectangular pattern, where the breakout of that resistance line will be that signal we are looking for to join a trend continuation. However, in as much as this old pattern has a potential of inciting a bullish move, we cannot ignore the potentials of sellers at this particular point in time. As if we look at this from a psychological standpoint, majority in the market who had bought the US oil spot at a very cheap price, let's say around the $76.50 level, just as it did yesterday, will at one point want to be doing some profit taking activity, closing in some of their position, which of course would reflect on the chart as a retracement of that previous impulse leg in anticipation of an uptrend continuation. So what I have did here is to take into consideration the potentials of sellers too if price action ever breaks down that support line of that flat channel we just identified here. And if we look at what has been going on here in the last couple of hours, we already have a breakdown of that support line here at a $78.50 level. Now the question here is, will this breakdown be a signal for a retracement phase? And of course, from a technical standpoint, whenever we have a breakdown of a key structure such as the $78.50 level, we expect that at some point price would retest the structure to incite a move in that direction. And please note that this is going to be a counter trend opportunity if price action goes on to continue below the $78.50 level. So if you are a counter trend trader, a scalper, and you feel comfortable taking counter trend opportunities, then you want to be having a sell stop order below the $78.50 level to capitalize on a minimum of 75 pips to a maximum of 200 pips move before we start looking out for buying opportunity. So as a result of this, I was able to project where price might likely get to before the beginning of the second wave of bullish momentum. And to get that, we used our Fibonacci retracement tool. So in fact, we have two impulse leg which I took into consideration. The first one is this one that started this week, as you will see here, and the second one is this one that started last week Friday. So I took the two into consideration. So what I did here is to run my Fibonacci retracement tool run it through the previous impulse leg, and we aim at an area between the 50 and the 78.6% of that previous impulse leg. So we have this area. Then I also took this one too. So we merged it together to give us an area, a golden zone area to look out to serve as a potential TP target for counter trend traders who will take advantage of the breakdown retest of the $78.50 level. So that is how we are going to be capitalizing on this one. So if you are a counter trend trader, you want to be joining that move to the downside. But for me personally, I would rather wait for price action to come into anywhere around the zone where I want to be looking out for patterns that will support a trend continuations. And when we are looking out for patterns here, we want to see something like either a double bottom structure to join an uptrend continuation, or probably a head and shoulder pattern where price continue to reject the zone again to incite another wave of bullish momentum. So this is how we are going to be managing our position if price action comes to break down that $78.50 level. So with that being said here, there is another perspective to this market which is needed to be taken into consideration too. And that is the fact that price action has been bullish, at least in the last couple of weeks now. And for me, the range we have here has a potential of being broken to the upside. So a breakout of the $79 level will definitely welcome buy position. Now, for those who have been profitable on the US oil spot so far this week, we have a profit in our kitty that we can leverage on to test waters around that $79 area. So I'm risking a buy stop order above the structure to capitalize on a trend continuation if price action ever breaks out that 79 level. Now, for those who are new to this market, that is, you haven't been part of this profitable journey we have so far, at this point, if price breaks out of the $79 level, capitalizing on a buy position there will need confirmations to happen. So in order to capitalize on that move, this is for those who are new to the US oil spot for today. So what we will be looking out for is a breakout of the $79 level. Once we sight the breakout of the 79 level, we scale down into our lower time frame. It could be your 5-minute, 10 or 15 minutes time frame to look out for signs that sellers are finding it difficult to drop back below or stay below the $79 area, and this would reflect on the chart as a retest of structure, continue by pressure, then we want to be part of that uptrend continuation. So that is how we are going to be joining any move here if price action refuses to drop below the $78.50 level. So it's a simple setup we have on the US oil spot. So let's be on standby to maximize the potential of any trading opportunity around this area. So I was able to spot a counter trend opportunity below the $78.50 level for counter trend traders. Why I said if price drops to the downside, I will personally wait for price to come within the zone where I will be looking out for reversal patterns anywhere above or around within, anywhere around this area to join a trend continuation to the upside. So these are my views here on the US oil spot for today. If you do have any questions, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off to see if there are any questions whatsoever before we move on to the next instrument, and you can as well use that time to mark out these levels and zones on your chart, as you will be needing them as a reference point to guide your trading activity for today. All right, so I see some couple of comments here. I see Chilea. Chilea, how are you doing today? Good morning. 9029, good morning, and thank you for checking in. I am very fine, thank you. All right. So 33467. Hey, good morning to you. 467. Thank you for checking in. Thank you very much. I really appreciate that. 799. Good morning. Susie MB, how are you doing? 631, they will help. I'm not sure I understand what you mean by that. 631, please rephrase your statement so that we can all be on the same page here. All right, thanks for checking in. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving into the next instruments on our watch list. So the next instrument on our watch list is the US Tech 100. Now, the US Tech 100 has been very choppy in the last 24 hours. In fact, we have a huge consolidation phase, an expanded one, in fact. Remember, we had a range initially where price action was caught. Let me extend this out a little bit so that we can see things clearly at this juncture. So we had this initial range between the 15,450 level and the 15,410 level, giving us an insight into the level of indecision at the beginning of the week. And we all know that whenever we have this kind of range, we want to wait for either a breakout of the resistant line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And I think prior to the live session yesterday, I told us all that we had the buy position triggered already, and we're looking out for more opportunities at the breakout of the 15,480. Unfortunately, I was taken out of that position in a loss, as you will see here. And this led into a wider range. As you will see, the range expanded into the 15,480 and the 15,380 zone to give us a wider consolidation phase. And you all know that this is must be connected to the anticipation of the high impact event from the US economic docket tomorrow, and that is the interest rate decision and Jeremy Powell's speech, which everyone will be looking forward to. And as a result of this, we have been seeing the reflection of the anticipation of this event on the chart. Now, we had price climb back up again. That was after the market settled, and we saw price climb back up during the early hours of today to trigger another buy position to the upside. And if you are taking advantage of that move, well done to you, as you will currently be running with about how many pips in profit now? About 35 pips in profit on that single move. And then the second one here, if you are taking advantage of that one too, you will currently be running with about nine pips in profit at this point. So my advice for everyone who took advantage of this buy position is that you want to definitely be securing your positions at this point in time, because we're still not sure where price action is likely going to be going. This consolidation phase is just getting wider and wider by each day as we approach the interest rate decision coming up tomorrow. So my advice here is to move all stop losses to the second entry anywhere right around or below the 15,480 to secure this position, while we wait and see how the market will be reacting to this current market structure. So now, with a well-secured position at this point, what is going to be our next line of action? How do we intend to capitalize on any potential move that is likely going to be happening in this market today? Now, the first thing I would like us to do before scaling into what we are going to be looking out for is to go up into the 4 hours time frame. Let's have a quick holistic view of what is really going on in the market from a long-term perspective, and also for the sake of those who are not part of our live session yesterday, to have a glimpse into what led into the decision we have been making so far this week. So scaling up into the 4 hours time frame, this was what we saw at the beginning of this week. Now, the first thing we observe here is that since the beginning of the month of May, our price action has been very, very bullish. And to further emphasize the strength of the buyers here, we had a couple of trend lines that we identified at the beginning of the week. So we had the first one here. Then we also added the second one, which of course has been supporting the bullish momentum till the present moment that we are in right now. So with a couple of trend lines here, it's obvious that price action has been bullish. Now our center of focus is around this area. So let's zoom right in so that we can see things clearly. Now look at what happened. I shared this yesterday where we saw our price action is currently around that ascending trend line, sharing a beautiful confluence with that zone, where we said we want to see how the market will be reacting to the zone to determine if price will be respecting that ascending trend line one more time to incite an uptrend continuation. And we also emphasize that this area to coincide a breakdown of that ascending trend line, which could incite a sell-off in this particular market. And we also acknowledge bus stops such as the 15,300, where we said if price breaks down, we want to see how the market will react to the zone to determine if we are going to be adding more sell position or getting ready to buy. Then the same thing with this ascending trend line here too, where we also want to look out for how price would react to that area if price action ever drops that far. Now, with the information we have gathered on the 4 hours time frame, it is quite clear that we are at a critical point in the market. We are depending on what market structure evolves into here will determine what our next line of action will be. So with this information right here, let's scale back down into the 1 hour time frame where we shall be making an informed decision for today's trading session. Now, scaling back into the 1 hour time frame, this is what we have been seeing here. And right now we have a wider range where we already have a breakout of the 15,480. That is one. And secondly, we have price action currently trading above that ascending trend line we identified on the 4 hours time frame. And you know how we use our ascending trend line in this community. When price action remains above the ascending trend line, we of course want to be looking out for structures and patterns that will support the idea of buying that asset. Now, with the situation we have right now, price action just broke out both the 15,480 and the ascending trend line to signal a potential bullish momentum. So at this point in time, we're going to see if the market, so for those who had missed out on the breakout, so we're going to see if the market will come back, retest the structure to incite a trend continuation to the upside. So for those who had missed out on this opportunity, we want to remain patient to see how the market will react to this 15,480 to determine to decide what our next line of action will be. Now, in addition to that one, we have another level here, which is situated at the 15,510 area, which of course we are going to be using to capitalize on an uptrend continuation. So let's label this and mark this out on our chart. So we have the 15,510 level. So we mark this level out on our chart. Place it at the top right hand side of the screen, and let's see how the market will be reacting to this level. So if it does break out that structure, we want to be joining an uptrend continuation to the upside. Now, another thing I would like to call our attention to here is this lowest point where price action has been for this week, and since then price action has been finding higher lows. And of course, when we start identifying higher lows in the market, we want to connect them together to give us a yardstick that we're going to be using to guide our trading activity for today. So we have an ascending trend line, which is the blue one on your screen right now. So if we bring back our candle chart, we'll make some adjustments so that it can contain most of the pivot lows right here. So this trend line here will be our yardstick for today's trading activity. Now, for us to continue to buy here, we want to see price remain above this ascending trend line. So we might likely see the situation happen, price drop into the structure, and look out for reversal patterns to join that move. However, if this trend line is broken to the downside, then a breakdown of that trend line will be a sign that the trend line may no longer be able to continue to reject the bearish momentum, and the breakdown will signal a bearish move. And remember, we are not getting too excited here, as we will need confirmations before joining any bearish move. And to look out for confirmations, as soon as we have the breakdown of the ascending trend line, we want to scale down into our lower time frame to look out for signs that buyers are finding it difficult to climb back above the ascending trend line. And of course, this would reflect on the chart as retest of either the 15,480 or the ascending trend line, followed by continued selling pressure to join the bearish move to the downside. So if that happens, we want to be joining a sell momentum at any point in time around that area, and then a further breakdown of the 15,450 will welcome more selling opportunity in this particular market. So let's see how the market will play around this area. And trust me, if you follow through with our expectations and allow the market to mature, you will definitely be on standby to catch any potential move in this particular market. So with a quick recap here, we have two parameters here which we are going to be using to guide the bullish momentum and of course the bearish move. And the first one here is this ascending trend line, which of course we identified here. So as long as price remains above that ascending trend line, we shall feel comfortable in a buy position. And if the trend line is breached, broken to the downside, then we will start considering selling. And remember, I said here that we are going to be waiting for confirmations before joining any bearish move. So these are my views here on the US Tech 100 for today. So if you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, and you can use that time as well to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So I hope you've marked out these levels on your chart. And so we shall be moving right into the next instrument on our watch list for today. So the next instrument on our watch list is the GBP USD. On the GBP USD as well, we have been witnessing a strong consolidation phase, giving us an insight into the level of indecision in this particular market. And remember, at the beginning of the week, we initially saw a range where price was confined between the 1.287 and of course the 1.284900 level, giving us a flat channel to work with. And you know how we do it. Whenever we have this kind of flat channel, we want to wait for either a breakout or breakdown of that range to give us an opportunity to either buy or sell. And prior to our live session yesterday, I told us all that we had a sell position triggered here And for those who had missed out on that opportunity, I told us all that we are going to be holding on for a retest of structure to join the trend to the downside. And if you had done that, price actually did move about over 50 pips move in that direction before that bullish momentum began. And one thing I was able to spot here, in fact, I shared this on my public platform, is that in the last 24 hours, we've noticed how sellers have continued to struggle around that 1.28200 level. You will see that since last week Friday, this has been persistent. We saw what happened here last week Friday. We saw buy pressure resumed as soon as price got into that area, hereby negating all attempt by the sellers to find new lows. We saw the same thing also happen during the early hours of yesterday's trading session, stroke into the later part of the New York session, giving us a clue that this could likely be a platform to drive bullish momentum for this week. Now, if we take a closer look at what has been going on here in the last couple of weeks, you will agree that price action has been very bearish considering the lower highs we have been noticing. But the fact here is that when price got into the zone, we saw that sellers were unable to find new lows, giving us signs that buyers are gradually gaining momentum, and this could likely be an accumulation phase that will drive a bullish momentum this week. And coupled with the fact that price remains above our key level for the week, which is situated at the 1.284, remember we have a key level at the 1.284 area. And remember how we use our key level in this community. As long as price remains above the key level, we definitely want to be looking out for patterns and structures that will support the idea of buying that asset. And if price drops below the key level, we want to be looking out for patterns and structures that will support the idea of selling. Now, with the situation we have right now, let me talk about the potential of sellers first of all. Now, for me to sell the GBP USD today, I would rather want to see price action slice through that demand zone at the 1.282 level to give me a signal that price action is likely going to be going bearish. And in fact, a breakdown of this demand zone would have taken out all the buy positions here to give us that signal that we are looking for to sell. Now, remember one thing at this juncture, it is very important that we wait for confirmations to happen here, as the breakdown of this demand zone could still turn out to be a false breakdown. And for us to have a confirmation, we want to see some retest of structure on our lower time frame before we want to be joining any bearish move to the downside. And before I even go further here, I want us to look at the higher time frame. There's something about this confluence here that I would like you to see, and that will also help you have an idea of what is really going on at this point in time. Now, when we scale up into the 4 hours time frame, remember at the beginning of the week we had a couple of trend lines here which emphasizes the uptrend scenario we have in this market. But the most important trend line at this juncture is this ascending trend line we have here, and you will see that price action closed around that area during the last week trading session, and since the beginning of the week we have been seeing some buy pressure around and above that ascending trend line, giving us a clue that buyers might likely be respecting the ascending trend line one more time to incite a trend continuation to the upside. And remember that we did not ignore the potentials of sellers too, as we said a breakdown of this ascending trend line could incite a sell-off into the structure to incite another wave of bullish momentum, or probably breakdown to incite a sell-off in this market. So you will see how important this confluence is, and the fact that we have a temporary demand zone just right within this area is a very beautiful signal that we are likely going to be seeing price climb to the upside. And of course, if price breaks down, we of course want to be on standby to capitalize on that move. And with this information we have here, let's scale back down into the 1 hour time frame. So by now you would understand the importance of the current structure we are in right now with that holistic perspective. So going back into the 1 hour time frame, I want to be looking out for buying opportunities as long as price remains above this key level at the 1.284. So if you already have a buy position running, well done to you. Our stop losses will be some anywhere around or below the demand zone, which will be dovetailing to between 20 pips to 25 pips stop loss, which is not bad for this current position. And if price action continues to climb higher highs, then we have levels like the 1.28490 and of course the 1.28700 area, where we shall be looking out for opportunities to add more position to our existing trade, hereby maximizing the potential of that bullish move. So that is how I'm going to be managing my position here on the US All Spot for today. So we have our levels here. As long as price remains above our key level, we hold on to a bullish bias, and the only condition that will make us want to sell the JP USD is for price action to slice through and break through that demand zone for us to consider selling the GBP USD. So at this point in time, things are still looking very bullish. Let's hold on to a bullish bias and let's see how the market will be reacting to these current levels. So these are my views here on the GBP USD for today. If you have any questions whatsoever, feel free to let me know in the comments section. So I will be taking the next 10 to 15 seconds off, waiting for your inquiries and questions, and you can as well use that time to mark out those levels on your chart. Okay, I see comments rolling in. I see your comment, Akure. Thank you for checking in. Good morning to you. I see 00410. How are you doing today? Good morning. 2522. Good morning. Nest 57. I see your comments. I saw Ilana Atta. Good morning to you. I do hope I pronounced your name correctly. So in the absence of no questions, I want to take this as a confirmation that we are good to go. So we are on the same page here. So we shall be moving on to the next instrument, which is likely going to be the last asset we are going to be taking for today. So the next instrument on our watch list for today is my favorite, the XAU USD, that is the gold spot. And in fact, in the last 24 hours, we are yet to make an headway as price really does not know where it wants to go at this point in time based on this current market structure. Remember, we had a bullish expectations during our live session yesterday. Let's run through that quickly before we go into the details of what our expectations is going to be looking like for today. Now, at the beginning of the week, let's run through the higher time frame. First of all, let's have an holistic perspective into what is going on here. Now, and also for the sake of those who are not part of the live session, so you can gain an insight into what we saw on this market that made us to buy yesterday, and let's see what happened here. So what I did here on the 4 hours time frame was to take into consideration the nature of price action since the beginning of this month. And if you look at this structure from an holistic point of view, it is quite obvious that price action has been bullish. Now, looking at what happened since the beginning of this month, we saw higher lows, of course, and when we connected a series of higher lows, in fact, we have a couple of trend line which price action has been testing, respecting every point in time to push price to find new highs. Now, if we look at how the market closed last week, we saw it come into that trend line here, this upper trend line here to close. And since the beginning of this week, though we saw the breakdown of that trend line, but it appears price action is respecting this major trend line at the bottom here. As you saw, we saw a sharp rejection leading into an engulfing bullish candle springing out and rejecting that zone, which of course reveals the presence of buyers around this area. Then, in order to guide our trading activity, we were able to identify a key level situated at the 1960. Now, if we go to as far back as the beginning of this year, this 1960 has been a very strong psychological area where it determines where price action is going when price gets into this area. But we are not going to bore ourselves with what has been going on since the beginning of the year. So I will just zoom into last month's trading session, and you will see here in the month of June, this level was a very strong selling niche at some point, pushing price to the downside. Then we saw price made its way back up again in the month of July. That was about last week, I guess. About 2 weeks ago, I think we saw selling pressure resume around that area. But the bullish momentum here was so strong that sellers were unable to push price further to the downside, giving us a scenario that happened yesterday, which made us see this phenomenal bullish engulfing move that pushed price out of that structure to find a new high at the 1987 level. And you all know from a technical standpoint that when price action breaks out of a key structure such as the 1960 level, as we have seen here, there is a likelihood that we could see some profit-taking activity which would reflect on the chart as a retracement back into that structure, probably in anticipation of another bullish momentum. Now, one interesting thing about the retest of the structure is the fact that it shares a confluence with both ascending trend lines that we identified earlier, which brings us to the question that will price action respect this ascending trend line to incite an uptrend continuation, or are we going to be seeing a breakdown of this trend line to incite a sell-off? Now, the answer to this question will come only if we understand how market participants will be reacting to that our week's key level at the 1960. And you know how we do it here with our key levels. When price action remains above the key level, we of course want to be looking out for patterns and structures that will support the idea of buying. But if price drops below our key level, we want to be looking out for patterns and structures that will support the idea of selling. Now, with the situation we have right now, price action seems to be oscillating just right around that key level, giving us a clue that participants are not sure where price will be going. And this could be connected to the anticipation of the high impact event coming in from the US economic dockets tomorrow. Remember, we have the interest rate decision and of course the Fed's chairman's speech, which everyone in the market will be looking forward to gain an insight into where they're going to be putting their money. And I'm of the opinion that if there's going to be an interest rate hike tomorrow, we are likely going to be seeing a drop in the price, where majority will want to dump the gold for a higher yield US dollar. And in fact, if there is no rate hike or it remains the same, then we are likely going to be seeing majority investing more in the safe haven gold spots. Now let's look at things from a technical standpoint. So we shall be scaling back down into the 1 hour time frame, where we want to see how the market has been reacting to our key level and the current market structure to decipher what our next line of action will be. So scaling down into the 1 hour time frame, this is what we have been able to see here since the beginning of the week. And remember, I told us here yesterday that as long as price action remains above this demand zone, anywhere above the 1960 and the 1958 area, we shall continue to hold on to a bullish bias. That was our agreement here yesterday, and we said we are going to be buying anything above the 1962 level. And remember, I bought yesterday. I told you I had a buy position and I got taken out at break even there. Now, I told us yesterday, if you recall vividly, that the only condition that will make us want to sell the XAUUSD is for price to break down that demand zone. That only if we cite a breakdown of this demand zone, only that will now make us consider selling. And I told you yesterday that we are not going to be jumping into the sell position right away. We are not getting too excited when we cite a breakdown. We are going to wait for confirmations to happen, which I said should come in the form of a retest of structure, where we shall be looking out for a bearish move to the downside. And you can see what has been going on here since in the last 11 hours now. Price action appeared to be going through a retracement of that impulsive move. See the impulse leg right here. Price action appeared to have retraced back into our golden zone area. So if we bring out our Fibonacci retracement tool and run it through the previous impulse leg, you will see that price retraced into that zone between the 78.6% and the 50% of that previous impulse leg, which normally supposed to be serving as our golden zone area, where we also want to be looking out for selling opportunities. So let's label this area, place it right inside that box. So what we are going to be doing here is to see if there are going to be structures or patterns that will support a reversal pattern within this area. So we are going to be looking out for something like this. So since we already have the breakdown of that demand zone, a retest of structure is what we are looking at to sell. So we are going to be looking out for something like a reversal pattern around this area to join a trend continuation to the downside. And it appears we're beginning to see some indecision go on within that our sell window, which we identified here, giving us a clue that there is an indecision around that area, and followed with sharp rejection of this area, we might likely be seeing a trend continuation to the downside. Now, coupled with the structure here, there is an ascending trend line I was able to spot this morning after taking into consideration price action since Thursday of last week. So when we connected the series of lower highs, we have a descending trend line, and in fact, this trend line is going to be our major yardstick to guide trading activity for today. So what this simply means is that as long as price action remains below this descending trend line, we will have no other choice than to look out for opportunities to sell the XAUUSD, and the only thing that will make us want to buy the XAUUSD today is for us to see a breakout of this ascending trend line, where the retest of structure should be giving us an opportunity to buy, while a further breakout of the 1968 will welcome more buy position in this particular market. But right now, price remains below the descending trend line, and we are going to be looking out for patterns and structures that will support the idea of selling. So now let's zoom right into what is going on here. Price action appears to be breaking down the 1960. In fact, I want to be selling anywhere below the 1960 at this point. So you can, if you can afford a wider stop loss, that is, if you can afford a stop loss of about 40 pips thereabouts, anywhere above that key level, then you could risk a sell order right below the 1960. But if you are a cautious trader, then I will suggest that you hold on and wait for a breakdown Then scale down into the lower time frame to look out for confirmations that buyers are finding it difficult to climb back above the 1960 level, and this would reflect on the chart as a retest of this area for us to join a bearish move to the downside. And if price action goes on to break down, retest the 1958, we want to be adding more sell position to our existing trade. Now, there is a caveat to this whole sell position, and that is the ascending trend line we identified on the daily time frame. Remember, we have this ascending trend line right here. So if price action continues and we continue to enjoy that bearish momentum to the downside, as soon as price action gets into the structure, we want to be moving all stop losses, secure your current sell position while we wait out and see how the market will be reacting to that level to determine our next course of action. Now, if price gets into that area and we begin to see buy pressure, we are likely going to be joining a bullish move if price breaks out of the 1958 and the 1960 to the upside. And if instead price drops below the trend line, then this will be welcoming more selling opportunities after a retest of that structure. So let's see how far this bearish momentum will go. So for those who could afford the 40 pips stop loss right here, you already have a sell position triggered at this point. Let's see how the market will play out here. And for those who are conscious waiting for a retest of structure, well, let's see if the market will give us that privilege to be part of that bearish move to the downside. So these are my views here on the XAU USD for today. I hope I was able to make things a little bit easy for you despite the complicated situation we have in this market structure. But if we take a deeper dissection, you will see that it is quite simple. All we just need to do is mark out these levels on our chart. Very important, the first one here is our key level, as we want to be selling anywhere below that structure and buying anywhere above that area. Then of course we have the descending trend line after connecting the series of lower highs since Thursday last week trading session, where a breakout of that trend line will be the signal we are looking for to buy the XAU USD. So you want to be marking out these levels on your chart, and in fact it's on this note I want to be calling it a day here. But before I draw the curtain, I would take some 10 to 15 seconds to see if there are any questions whatsoever as regards to all the assets we've talked about today before calling it a day. So I'll be taking the next 10 to 15 seconds, and you can as well use that time to mark out these levels on your charts, as you will be needing them as a reference point to make your independent trading decision. Okay, I see your comment 8603. Good morning to you. Glad to have you around. All right, so in the absence of no questions, I want to assume that we are all on the same page here. It has been a wonderful and inspiring session as we were able to take on 4 financial assets today: the US All Spot, the US Tech 100, GBP USD, and of course the XAU USD, where we have been able to identify simple setup using only key levels, trend lines, and of course chart patterns, coupled in conjunction with the anticipation of the economic events to identify potential trading opportunity ahead of the New York session today. So I'm very confident that we are well equipped and ready to take advantage of any potential move in this particular market, as we were able to simulate all the potential trading opportunities that will happen based on the current market structures we have on this asset. And for those who joined us for the first time, I hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, I advise you to be part of our subsequent session, as the more time you spend with us, the easier it gets for you to understand and eventually use the information you have gathered here to make your independent decision on your account. So it's on this note I wish you all the best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get ready for the most anticipated economic event for tomorrow, that is the interest rate decision. Do have a wonderful day, everyone, and see you tomorrow as we get prepared for the new day. Cheers, everyone, and bye bye.